And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report. It is Friday. It is Friday Fun Day, and that means we got to bring in Coach Frank Martin, Frank the Tank. How you doing, sir?
I doing good, thank you. Always fun to be here. Always fun to have it be a Friday. It's a good day.
Absolutely, absolutely. And we also have Noah, Mark, and Cody on the back end, like they always are, and regulars here. I am Coach Tim. We're going to be breaking down the markets here today. Many things to actually unpack. More with Trump and Twitter and social media. We're going to be discussing that a little bit. Twitter's taking a little bit on the chin here today. The S&P hesitation candlestick up here as we're closing out the week. 4 big green candles, actually little green candles, but now one down day out of the 4-day week here. It's going to be very interesting to see if we close there. Outside of that, Hong Kong, China, the president, and more from Jerome Powell. If you are new to our channel here today, welcome. It's always great to have beginners and new traders as well, even veterans. Click the subscribe, click the bell, come back and join us each and every day. Let's get right down to it. Noah, hesitation candle up there at the top. We're above the 200. We tested that on Tuesday and then we broke out of it. It's been an interesting week. What's your read on the chart?
Well, a little bit of a retest and some profit taking on a Friday is probably to be expected after it breaks out to a new new high above that 200 period moving average. Pretty easy to spot this one coming with yesterday's small body candle in doji, a little pullback into the retest. It'll be interesting to watch how the market reacts to the 200 or the rising 9 or the old sport resistance zone. Call it a zip code between 3,000 and probably 2980, 2975 ballpark. And see if the market's going to find support. It won't happen today, obviously, but it's something to keep an eye on.
Mm-hmm. Mark, obviously the first red candle we've had all week. I mean, any pullback in this market for the last month and a half has been bought up pretty aggressively. Not much of a pullback here. We're only 1% on the very first candle after a doji, but what's your read on the selling here today, Mark?
It's absolutely easily known what the selling is. It's a hesitation before a big event. You see this often. Back in the day, you used to see this before big Fed meetings, before the Fed telegraphed everything they did. Sometimes you would see it before an unemployment report. Just came out, actually, White House said that the Trump news conference on China will be held at 2 p.m. Eastern today, so right at the end of the show. So the hesitancy in the market, you saw a sell-off of all of the profits in the last hour when the algos picked up that Trump was going to be holding a conference. We'll get into the speculation of what he might say on China. I think it will be a little bit more than his tweet this morning, where he just said China! Exclamation point. That was his entire tweet.
That was it, huh?
Yes, that was it.
So, very well articulated there.
And we'll get into China here in a second. But market's hesitant ahead of what could be very, very interesting. Could be a very interesting news conference.
And we've been waiting for a response out of the administration, the president, and the U.S. here on how they're going to handle this stuff that's been happening in China, the rhetoric, the increasing tensions, and all of those kind of things. So the fact they're holding it at 2 o'clock Eastern is interesting to me, Frank. I assume they would have pushed it to after the bell.
Yeah, this one felt like an after the bell one.
Yeah.
That's a little surprising.
I wonder why. I mean, maybe just wants to get it out there. Maybe it's not going to be that damning. Who knows? I mean, it's just speculation at this point, but the market is hesitating in front of it. Frankie, what's your read on the conditions right now in stocks?
Nothing really has changed for quite a while from a technical point of view, which is the angle that I always am coming at things with. So to me, this is just really no different than yesterday, which is no different than the day before. We broke out, we're holding the breakout, we're making higher highs and higher lows. So I don't think today's candle, from at least a technical point of view, maybe for an entry, yeah, sure, I'm not going to buy necessarily right here, but technically, it's the same story it's been, right? And one candle, whether it's green or red, isn't going to change it unless the placement tells me it should.
Mm-hmm. Give me FXI if you can here, Noah. We might as well talk China. We're already on it, and let's have a discussion about it real quick. Mark, what is the speculation? What are you anticipating? I know that you've been tracking these headlines. You probably have 20 pages of notes on China just from this week alone, I'm guessing. I know how you focus on these type of stories, and you've been right in the middle of it for a long time. What's your read on this? What do you think the president actually might come out and do?
Well, I mean, Larry Kudlow, and this might be a telegraph. Larry Kudlow, who is the Beijing Bob, of this administration, who does not say a word that is not on cue with the administration's talking points, this morning on Fox News said the president is furious over what Beijing has done in recent days, weeks, and months. And he added that Trump will have a lot of comments and a lot of ideas about how to hold China accountable. That's a pretty strong telegraph, right?
Furious.
So like he's out there like kind of planting the seeds that there's going to be something. Now, it's the $1 billion question, or the $1 trillion in the market standpoint. What is that something? What are these lots of comments and ideas of how to hold China accountable? What are the range? Is it going to, I mean, you have two camps. You have the optimist camp who says, well, Trump's not going to rattle the markets, right? You know, he doesn't want to do anything to really disrupt what is, you know, a upward moving stock market. I mean, in a perfect world, Trump heading into the election has an improving economy, a really strong stock market. That would be wonderful for his election chances.
Hold on,
chances.
breaking news. I think we might have a Trump impersonation on the show here right now. Noah, is that hair Trumpian? Is that what I'm seeing here?
Turns out I have an entire drawer full of costumes.
What are you going to say at 2 o'clock there, Mr.
What are you going to say at 2 o'clock?
Furious. I have a lot of things to say about China.
China.
That's fantastic. Anyway, sorry, Mark. I had to acknowledge it. Anyway, Mark, go ahead and continue.
So yeah, well, I so want to play into this, but
Me too. I want to lean in so bad, but
I want to lean in so hard. You know,
on the show discretion.
You know, so you got that optimist camp, you know, that wants, you know, President Davidson's, you know, re-election chance. You know, don't think they're going to do anything to rattle that. But then you have this other camp who is like, listen, there's a lot of things on the table. Some of them are really, really potentially troubling. What does he do with Hong Kong? Well, Secretary of State Pompeo telegraphed that earlier in the week, where he said Hong Kong is no longer autonomous with China. So it's almost, I hate using the word certain, because when you're in the realm of politics, but it's been telegraphed that part of Trump's speech will be, you know, basically revoking Hong Kong's privileged trade status, or at least alluding to that possibility. That wouldn't be necessarily a terrible outcome for the market standpoint. One might argue that's priced in. It wouldn't be the most shocking. Other things he could do on a financial nature, things with the trade deal, unknown things that really lay down the hammer hard. Those are the scenarios that has the market hesitant right now. Mm-hmm. So if he comes up and if it's just rhetoric, and if there's not a lot of actionable items, probably market's just going to keep on what it's doing in the coming weeks. You know, if he lays the hammer down hard, you know, you could see a little bit of a sell-off.
Going to be interesting last 2 hours. I wasn't expecting that on a Friday afternoon here, but now we all of a sudden have some volatility implications building into this event. We'll see. A lot of times these things are no big deal. Quite frankly, they fizzle out, but we just don't know, which is why the market is hesitating, probably a little profit taking right in front of it. Across the broad markets, by the way, I mean, the Dow looks the same, the S&P looks the same, the Russell looks the same. Give me the NASDAQ here for a second, though, because you do have relative strength in just the percentage regard, little momentum rolling in here, guys. I mean, the NASDAQ has been the top performer. Tech has been so strong for a long time. Frank, are you starting to see better opportunities elsewhere? Do you still love tech? I mean, how are you approaching this?
I still like tech, but I am starting to see other things that are, you know, I don't want to say catching up, but, you know, things like REITs. You know, for a long time, I wanted nothing to do with REITs. And all of a sudden, you know, there's some interesting setups. Utilities, you know, there was some really strong movement in utilities yesterday, industrials, financials. And so I'm beginning to personally look at it as, yeah, I still like tech, but I kind of like some other things too. Whereas for a long time, it's just tech or communication services and the rest is hard. So I think we're seeing a little bit of catch up from that point of view.
Yeah, I'm seeing charts that are improving in other areas that have not been there for quite some time. Frank, you know, you do your scanning on Friday. I know I do as well, as we all get ready for our weekend reports. And it's not just tech now. I mean, there for a while, it was just a few industries, communications, technology, those types. But now there's some other charts that are looking pretty good. You know?
Yeah, for sure.
Yeah. Let's move on to the dollar real quick if we can. Powell had an interview here today. I believe another Zoom interview. It's the way of the world these days, boys. Just pop on Zoom, even if you're the head of the Federal Reserve, chair of the Federal Reserve. Mark, what did Powell have to say? And then I also want you to break down personal spending, personal income as a personal savings number, because it all does relate to the dollar here. Give us an update if you can, Marky.
Well, Powell's speech was pretty boring. Nothing that we don't know. Nothing that he hasn't talked about. The couple things that I took away, the two big things were his worry about the risk of a second wave of the coronavirus. For those that have dived deep into Fed reports and that, which basically is like 6 people in the entire population, because I mean, dry material, right? The Fed has been very clear that a second wave would be absolutely devastating if the economy shut down again, like epically devastating on multiple levels. And so he highlighted that risk again of a second wave. And then he said on a more optimistic note that the Fed is days away from making Main Street loans to businesses. So the Fed is out there, the Fed, one cannot say that they will be accused of a lack of not trying when all of this is said and done. And so Main Street business loans directly to small businesses that are suffering. I saw a report, a survey out today that almost half of small businesses expect to close down permanently.
Wow.
That is the expectation of small businesses. And so Powell out there trying to get money to Main Street, get money to those small businesses. And if you're like, well, that's good for big business, this and that, who do you think spends all that ad money on Facebook?
Mm-hmm.
Who spends all that ad money on Google? Millions
small
of jobs.
businesses are 45% of the economy. So, I mean, it's a big deal. But my instant thought when you said that, I had no idea that was announced here today. Give me KRE if you can, because who's going to facilitate the loans? I mean, with the PPP thing, Mark, it was, yes, the Fed's providing the money through the Treasury and all that kind of stuff, but you get your loan from your credit union and your regional bank and all that kind of stuff. So I'm guessing they're going to have a similar program because the Fed doesn't want to actually collect your payment every month, right? If you get a loan. Do you think regional banks are a beneficiary here? Do you have any? I know the big national banks are too big to fail. You have thesis around that, but maybe regional banks have some interest. We have a program. I read a stat today here. We now have like $1 trillion in corporate bond offerings in May, when it took last year all the way till November to get there. Just this free money in the market is just apparent, Mark. Regional banks, any interest?
No.
Yeah. Is that just because of the size, the status? You don't think they're going to be able to benefit from this free money in the market?
Dude, I'm an old-fashioned social capitalist. Like, give me companies that I know. I mean, there's so many things in this economy that could go wrong, right? Whether it's commercial real estate, small businesses, all of that. I don't know what the future holds. One thing I do feel good about is that big companies will always get bailed out.
Mm-hmm.
They'll be the first in the line. So, I mean, whether that's right or wrong doesn't matter. If the wind's blowing south, that's the direction I want to be heading. I don't want to fight the wind. So
Gotcha. Zion National Bank. I don't know. I think they'll survive.
Probably.
Local Utah bank.
Yeah, that was my first bank, I believe.
Was it?
I think so. It wasn't my first, but I was a credit union guy at first. That was my first account. So
yeah. I love credit unions. I still have accounts at credit unions and banks. I use them all. But back on the Fed here for a minute, it's really interesting. All the programs, all the money, all the promises that they're trying to make. And yet it's always on the backdrop of this future that has a lot of risk in it, Mark. If this happens or that happened, they keep calling on fiscal policy. So this is not new from Powell in that regard, but it's new in terms of trying to get money to small businesses. What else did you get from all that?
Oh, I mean, he did say, the Fed, they have in recent weeks had a much darker message about the future, but on the other hand, that the market doesn't care about any of that, right? Because they care about the other half of their message is of, we are going to do everything we can. We have a lot of things we can do, and we have no limit to what we can do to help. That's the message the market focus on, and maybe rightly so, right? Because if things get as bad as they could be, well, that's a really ugly picture that you don't want to spend a lot of time thinking about. It's a much easier saying, all right, the Fed's going to trillions and trillions and trillions of dollars. We are going to spend our way out of this one way or another. Now, maybe that has long-term ramifications. I don't know. But that is the message the market focuses on. And to some level, I guess I buy that.
Well, and back on the S&P for a minute here, Noah, because I do buy it as well, Mark. You gave me some numbers I found just absolutely incredible this morning, and I do want to talk about it. In the month of April, personal spending by consumers was down 13%. Now, Frank, we're in lockdown. We're not out going to restaurants. That makes sense, right? You're not going to spend as much money when you're at home all the time. Personal income went up 10%, even with all the joblessness, Mark. But that's probably because all that government money, right? I mean, the free checks, the stimulus and things.
Well, I mean, and think about how fascinating that is. And this little 3-4 minutes we're going to spend on this subject is absolutely fascinating to me. Spending went down 13%. At the same time, individuals had 10% more money to spend.
Mm-hmm.
Now, that net result in the personal incomes and outlays report this morning meant that personal savings exploded by $4 trillion in May, rising from 2.1 trillion to 6.1 trillion dollars. Savings, money available, they're not spending it, but they have more money. As a collective whole, US citizens, their income rose 10%. 10%. Now they're not spending that money. What are they doing with the money? This is where I find it really fascinating, and I have a huge thesis I'm developing on this. So 10% more money. So trillions and trillions of additional dollars in US consumers' pockets. Now, they're paying down debt with some of that money. They're putting it into savings, some of that money. You know what the number three thing they're doing with that money? They're buying stock.
Awesome.
So we've injected trillions of dollars, and we'll continue to do so in the coming months. Those CARES Act programs don't expire till the end of July. One of the things people are doing the most with it is buying stock.
And savings. It's fascinating to me.
And savings.
Yeah.
So you can look at it as a glass half full perspective. That's a lot of money in savings that as students become more confident, because another thing, we had so much fascinating data out today. The hope expectations in the University of Michigan's consumer sentiment, which is perhaps the biggest consumer sentiment, was down.
Yep.
Now, if that ever picks up and individuals have all of this money in their pocket, this is where you can see a V-shaped recovery scenario. That if individuals become more hopeful and they have all of this money in savings, that's a lot of stimulus that hasn't even been injected into the economy yet.
Well, and it warms my heart to hear that people are finally, getting excited and interested in the stock market when they got a little bit of extra capital. There's no question about it. I get worried a little bit in situations like this, Frank, in one regard. If the public gets pulled in on a big rally and then the markets completely take a dump, it might give them a bad example of what equity investing is, for their lifetime. I saw that in 2009. I saw it when things crash. You see actual percentage ownership by American people, by actual individuals after big crashes go down, obviously, and big rallies, it goes up. I love hearing it. I just hope everybody out there, if you're new, you need to get education and information so you know how to properly invest with money management.
Here's the thing, because there's the old adage and that retail investors can't move the market, right? That retail investors are flies on the wall. They can't really do anything to move the trends or the market. But have they ever, you've never had a jump in personal income like you coupled with a decrease in the actual spending. You've never had that in the history of the market. So we are experiencing, for literally the first time ever, this huge surplus of cash by retail investors on a level that can move the market. And so with that money flooding in, it helps explain a lot of price movement to me over the last couple months.
It does for me as well. It's a really, really interesting data point. I got to tell you, anecdotally, I mean, have you guys had people in your life that never showed interest before now asking you about stocks? Because I have.
Yeah.
I mean, I had some kids I grew up with down in Emery County, Frank, who I haven't talked to in 20 years. Send me a Facebook message. Hey, how do I open a stock account?
Oh, really?
And I'm like, well, you can do this, this, and this, you know, and I get it. The
Did they at least
there.
ask about the family first?
No.
Just like BOT.
Hey, I hear you're the stock guy. So how do I open an account, Tim? All right. Yeah, I gave it to him. But the interest is there. Mark, I know you've had people in your life reach out to you. Noah, what about you?
Oh, absolutely. I get those what do you call them? Direct messages on Facebook, probably one a week for the last couple of weeks, maybe more. And then even like random family members, you know, kind of come out of the woodwork, like, what should I put money in? Particularly around that oil, when oil went down to zero, everybody got all of a sudden interested in wanting to buy it.
Yep.
Jabon,
I heard that too.
my man, Jabon Wilson, who I have rumor, Jabon, that we're going to have you at some point here on one of these shows. But Jabon says the same new people running into the markets right now are the same newbies that ran to Bitcoin. That's the concern, right? Massive. That's a good point, Jabon.
And Tim and I, when we were theorizing about this, because this is some of the most fascinating stuff I've ever seen. Listen, I read the personal income and outlays report every month. You know how many times I've ever talked about it with another human being? That would be zero, because there's nothing interesting to say other than from a geek standpoint of these little mic. This is a massive, massive thesis to build on, because one, what's going to happen in June and July? You're still going to have additional money funneled through those $600 a week extra. Income is still going to go up regardless of what happens with the economy, right? What happens after that free money stops and people don't have any money to put into the stock market anymore, as far as the extra surplus free money?
Dude, they doubled down with their gains on DraftKings and Tesla. What are you talking about?
Right. They're going to have more money because they've been buying DraftKings.
I'm just saying, around August 1st, I'm going to be very careful with naked puts I might sell.
Which is why, by the way, probably why Powell has upped his rhetoric about more fiscal policy, trying to get the government to acknowledge this. They just want to keep this train running, modern monetary theory style, Noah. Fascinating, guys, and there's no question about it. Obviously, hesitation candlestick here. I found the personal savings number to be incredible, Mark. People don't ever save money. Obviously, a pandemic and fear is going to make you have to reevaluate. Oh, maybe I need a little cash on hand, Frank. And those are some good life lessons to have.
For sure.
Everybody needs to have a little savings, guys, so that you can deal with things that happen in life. No doubt about it. I love investment, but it doesn't mean you shouldn't save something. Let's keep working through markets here, guys. Love it. Crude oil next, if we can. Stuck in a range up here. I don't see anything. Mark, I know rigs come out here today at some point, probably not out yet. Any update on crude oil?
No, I mean, there's nothing, literally nothing new to add. I mean, we could go over the whole big picture. The EIA, I guess, people focused, you know, even though there was a crude inventory build, traders supposedly were focusing on gasoline inventories that went down. There's not a lot to see. Production's been slashed. Probably going to have price stabilization for a while. You know, so find a boring way to cash flow your favorite oil trading instrument.
I see the chart and I see that it's got a high base there, Frank, but I'm personally neutral, and I'll tell you why. I think this whole radical stuff the last 2 months has kind of brought it back to maybe where there's some actual supply demand equilibrium. Having talked to Mark every day about this for months and months and months, it feels like a period, Mark, where crude might just kind of chop. That's my personal take on this. But Frank, the chart still does look like if you get a breakout, you could play that, right?
Listen, I don't disagree with what you said, but absolutely you can play that break. And the longer it develops, the more excited I'm going to be about it. I don't need it to run. I need it to move for 2.5 days, right? From a trading point of view. Very clean. It's remained clean. You know, it's obviously hasn't broken out yet. I'm fairly happy that it hasn't, and certainly glad it's not doing it on a Friday. I think this continues to be on that breakout list for me without a question. That ceiling gets taken out. I expect at least short-term price appreciation and could be something there.
Quick peek at natural gas if we can. Choppy here, guys. Back and forth, back and forth, but back and forth. Mark, I know this is one you were identifying for naked puts deep out of the money on those levels that you liked. What's your read on nat gas here? Is kind of chopping down in this range?
Oh, I now own 100 shares of UNG.
Oh, congratulations.
Congratulations.
I finally got put something. I sold an in the money naked put 2 weeks ago. I think I sold it for $70. I closed it out today for 50, picked up the shares. Because when I sell a naked put, I feel dirty if I don't actually pick up the shares. I feel like I was not actually truthful in that I wanted to own it. So listen, we're in a range. We're in the broad range. We're kind of in the middle of that range. Weather in the month of May was a little mild, but at the end of the day, I like ranges. I like ranges a lot. So as long as support holds on natural gas, I feel comfortable.
Mm-hmm.
So a lot of production is being sucked out. Like once again, like oil from a fundamental standpoint, it's hard to see natural gas rip and roaring back up to those highs even from last year. But we're at historical lows.
Cash flow. As long as it rattles back and forth, you can cash flow on it, which I think was what you're approaching it for, right? It's
the same thing with oil. If natural gas went lower, what do producers have to do? They're going to have to cut production, especially with a lack. There has never been less appetite for investment into oil and natural gas than there has now compared to the last 10 years.
Mm-hmm.
It is bottoming. And if natural gas goes lower, what do producers do? They cut production.
Mm-hmm.
It's that simple. And so I love that natural equilibrium that exists in commodities. If it goes lower, they cut production, help stabilize price. I just love that.
Gold next here, guys, rattling back and forth for almost 2 months now between 1680, held the 1700 level this week. Now we're up at resistance. Frank, you famously, you talk about this concept all the time. The longer something chops sideways, the more you like a breakout in conditions like that on most products. Why is that? If you can explain that, I think that would be awesome.
I guess to me, it's the psychology behind it. Every time it tests that resistance level, everybody knows that's resistance, right? That's not just me who knows that. Everybody with a pair of eyes knows it. And so it's a very smart, reasonable place to take profits, right? And so the more we test it and people have more and more opportunities to sell, once, hey, doesn't tell me a lot, right? Twice tells me a little more. 3, 4, 5, sometimes a lot more than that times. If they're not going to sell it, why are they going to sell it when it finally breaks through? To me, that makes no sense at all. If you're going to sell this, sell it at resistance. I get that. If you're going to sell it as it's breaking resistance that it's been fighting with for, sometimes months, to me, there's no logic at all in that. I don't understand why someone would do that. That's why I like it so much. To me, it seems like, well, the sellers are gone. The potential, short term at least, they're gone. The buyers are having a whole new opportunity. So the psychology is what I like so much about it.
Mm-hmm. Well, and then short sellers capitulate when the breakout happens. They buy back and cover, right? That's what they put shorts.
You all end up kind of on the same team, at least in the short term. At least that's the theory.
Love the consolidation. We're up at resistance again, but you got to look at the breakout on silver here today, guys. We've been talking about this 5 days. It's beautiful. A pretty one. Frank, walk us through what you're seeing here on SI. Noah, let's move on to silver if we can.
This one, you can't ask for a whole lot more than how silver performed. Right, we had that big breakout, run up to 18, consolidate for a couple of weeks, very clear top, very clearly know where resistance is, and not a lot of resistance until we approach that 19. Beyond that, this is what you want to see out of anything from a breakout point of view, whether it's, longer term or on an hourly chart. Very clear top, people have a chance to sell, they don't do it. How do you not love that breakout? That one was clean. That one was, quote unquote, easy. I personally believe.
Mm-hmm. I like it. I know there's old noise back there, and I get why somebody would hesitate if they're just trading and whatnot. from a short term, maybe even taking profits off the pivot if they played it that way. But man, you got to like the strength in silver recently. Give me a weekly chart on this, guys. I mean, silver bugs, and they're out there, believe me, and I am one of them in many regards. They've been waiting for a run in silver for 10 years, if you really think about it. And that big long-term picture here, guys, I know on the daily chart, it looks like 18 is a high level, but historically it's been much higher than that in big runs. Mark, you think silver can make a comeback in this environment? Same thesis behind gold in some ways, but an industrial metal and different premises, I know. What's your long-term big picture fundamental read on silver?
I like silver better than your average stock. I've been saying that for 5 or 6 weeks now. There's downside if the whole economy were to go through a depression, and there's downside to that, but that affects perhaps your average equity and silver equally. Silver metal, like you said, it has that precious metal kicker to it.
Yep.
Right. And with, once again, go back to the trillions and trillions of dollars, right? There's some heat behind silver. Once again, I'm getting left behind. All my naked puts are expiring worthless as I lob them down below. Silver's been the one thing I've hated myself most on not buying at the lows, not buying at those lows that happened after the crash when margins were getting thin. There's some heat here. There's some heat.
Definitely. And Noah, I know you're a big proponent of not only trading or investing in the ETFs and the futures, but you love physical silver. And there was a glut in that there for a bit when people had just a run on it. They wanted all the physical coins. What's your read on silver markets here, Noah?
Well, I like it. It's shiny. It stores well. Well, it tarnishes. You got to polish it from time to time. No, I really like it. I think the momentum's strong. I like the size of the breakout. I mean, the last little swing run where it violated that 200 period moving average, that had really good momentum. And when you get really good momentum into a resistance ceiling, I think the odds of probability of it breaking out are much higher than if it just kind of meanders up into that resistance zone. So it's come with the purpose. It looks like it wants to break out. And I'm always a fan of owning it regardless of the price. So go silver. Go silver away. That would have been a good place to go.
And silver, make no mistake, it can move. It can go on some pretty impressive runs. I think you have to like what you're seeing, whether, if maybe you're not in already, maybe today's not the day I want to buy at the highs here, closing in on resistance. But yeah, this is showing a lot of strength to me as well. I love when I agree with Noah, because that means I'm probably right.
Breakout Frank knows a thing or two.
I love it. I love it. You can take a quick peek at the Bitcoin chart. Not much there. It's consolidating though. And Frank, I know that you don't trade Bitcoin. It's really not one on your radar, but you probably got to be impressed by this consolidation. A breakout up here at 10K would be legitimate, don't you think?
Yeah. And actually, we talked about this, a couple of weeks ago when it was running or working its way back into that little consolidation. Again, a clear resistance point. I'm not going to do anything with Bitcoin. It is not my jam at all. But I mean, it's very identifiable. Again, we know where not to buy it, right? We know where people are selling it. And so pushing through that and hey, speaking of things that can move, right? So Bitcoin definitely is one of them. I certainly could see why it's on someone's radar from a breakout perspective.
Yeah, me as well. Guys, that's our big picture market skyline. We're going to transition here into stock talk, and where we break down individual company news, whether it's earnings or chart related or just information that is pumping out there in the market, upgrades, downgrades, whatever is on our mind that grabbed our attention for the day. Real quick, if you're watching the show right now, it's Friday. It's fun day. I've got my casual beach t-shirt on here as well, Frankie. Looking forward to a nice weekend. Oh, Maddie's daughter's birthday is today, a little cat.
Yeah.
So we're going to have a little cake.
Happy birthday, Kat, if you're watching.
She might be, dude.
She might be. Happy birthday.
I'm excited to go and see that little kid and celebrate that day. But other than that, guys, I mean, if you're watching our show right now, let us know where you are. One of my favorite things I do every now and then on the halftime report is say, hey, just tell me where you're watching the show from right now. And if you are watching, just type that in the chat. If you're in Canada or the US or anywhere around the world, just let me know where you're watching the show right now and represent #Team Tackle. And if you're new to our channel, subscribe, click the bell, come back and join us each and every day. Couple things. Number one, Twitter. Let's bring this one up. I think we got to talk about it. I know there's the political side of it. People get triggered here pretty easily, Frank, in 2020. There's no doubt about it. But this is market implications in some regards. You've got The president, blasting social media this week, saying he's going to come out and take away some of their liability protections from that Section 230 law from 1990 that I had never heard before now, but now I got to know about it, right? Everybody's talking about it. Then Twitter doubled down. They came out and labeled one of his tweets something as well. Frankie, you're on Twitter. You run the @TackleTrading Twitter. You spend as much time on Twitter as anybody I know. What is this all about? What happened here?
Listen, you're assuming I'm an average Twitter user, and I am not. So I share things from Tackle Trading and interesting charts that you or other team members or other coaches bring to my attention. I am not browsing through Twitter. I talk to the team on Twitter, and I share ideas on Twitter. So I'm the wrong guy to ask that. I do find it very interesting because, when you have the whole big tech and censorship conversation, it is, wherever you might stand on it, I think it is something that you do want to have. Is this the reason? Well, I'm not going down that road, but yeah. I do think the end result of having that conversation, I do believe it is important. And hopefully that's what this leads to, instead of just, mud throwing or whatever you want to call it.
Well, and my personal opinion is this is not just a right or a left issue, quite frankly. The role of technology and social media in our lives is more than any of us could have imagined 20 years ago. How that impacts politics, conversation, all that kind of stuff. Noah, I know you're a libertarian. You're like a stay off my lawn kind of situation.
Kind of a classic liberal as I evolve my liberty loving policies. It's been interesting. I'm all about free speech and critical thinking, and I don't like the censorship, but I do understand people's desire or want to, to try to keep things what's hermetically sealed. I don't know what you go with on that, but it's very, you're right about it, Tim, being it's not just a left or right issue. It's an American issue. It's a global issue, really, because these are global entities at this point in time. And if you can control the gateway to speech and information, well, that's pretty much everything. So.
Yeah, I'm with you. And Hero, by the way, Team Tackle member, longtime member. Great to see you, Hero. He says the only people I follow on Twitter is Trump and Musk. And so, Hero, I'm going to give you the trifecta here. There's the @TackleTrading Twitter account. We would love you to make a threesome there, Frank.
Yeah, let's add one more, Hero.
Let's bring in the Tackle Trading Twitter. Mark, what is the market implication from Trump going after Twitter a little bit here? Their pushback. I like the pullback on Twitter, by the way, technically. But Mark, what's your read on this whole situation?
Listen, I don't know. At the end of the day, I mean, when you evaluate a company, you're evaluating profitability, growth, all of these different metrics. Is there anything that the government would do that would potentially impact that? It's really difficult to wrap your brain around. And so, I mean, I guess if Twitter got cheap enough, I'd take a gamble. But, it's kind of like they're in the crosshairs, and who knows? I mean, when Trump sets his sights on something, you can love him or hate him, man, he doesn't let go of a grudge really easily. And
no.
And Trump, listen, they labeled one of his tweets. He is never going to forget that. He is never going to forgive that. Ever.
Well, they've done it multiple times now, not just once. It's actually happened a few times now. They blocked one for him, in theory, inciting violence this morning.
Yeah, listen, and the first time a kid comes on your lawn, you're an old man sitting there on your porch drinking your iced tea. The first time a kid comes on your lawn, you get mad, right? You yell at him. The second time they come back, you get furious. The third time they come back, you go get the shotgun. All right. And that's where Trump is with Twitter. The more times they do this.
Well, that escalated quickly.
You know,
would have started with turning on the sprinklers, maybe. You go straight to shotgun. Okay.
We're going to have to label.
Let's just assume he's using cracker shot or something like that. Okay.
We're going to have to label that comment as potentially inciting violence. So I'm going to have to remove it from our YouTube show here.
He's using cracker shot. It's okay. Nothing dangerous.
No, he is never going to forgive this ever. So Twitter's going to be in the crosshairs for another 6 months or 4 years and 6 months, depending on whether Trump's reelected or not.
Well, yes, we all know that, of course. I mean, the second they labeled the tweet, I don't care who you are. You had to be like, oh, snap. Let's see what happens here.
Get your popcorn.
Get your popcorn ready. But it feels like a lot of noise that may not actually do anything. Maybe it starts a conversation. Maybe it's a longer term thing. But there could even be a legal fight here, guys, that could take months, if not years to work.
Oh, it's hard to wrap your head around about what actually the implications to Twitter's profitability and growth are, right?
Yeah.
I mean, for all we know, millions and millions and millions of people are going to flock to Twitter now just to see if Trump's tweets. I mean, who knows, right? You know.
Yeah. Yeah. Some companies with earnings overnight or even this morning as well. Some that grabbed my attention, maybe not from a chart perspective, but they're on my watch list. Just flash through them real quick here, Noah. CRM, if you can, Salesforce.com. Market Darling, one of my favorite companies. Brought it back into a range now here on a post-earnings downward move here, Frank. Kind of changes the chart a little bit for me. I know it's near the 20. When you see a post-earnings price action like that, does it do anything for you?
Not today. Not today. We'll see how it holds up. Does it hold up? Do people say, hey, this is a sweet deal. Let's create this higher low, take another run at resistance, you know, a couple of weeks from now? Maybe, but quite honestly, not a whole lot to see here to my eyes.
Hey, Noah, will you draw a line on that old breakout level? Because I mean, when I saw
choices here,
you know, that one that broke out at around here, I'm looking at my chart.
Old resistance from December.
You're talking back in here.
No, I'm talking at like 164 where it broke out at the start of May.
About where my line ballpark is. I mean, that's
about that ballpark. So the last time, a couple of weeks ago, and we talked about this on the weekend, it was a nice little trade setup where you had pulled back to that old breakout level, bounced off it nicely. What I'm looking for is a potential pullback to that level again. Test it, get confirmation to the upside. I think that would be a nice potential pullback entry. So something that's been tested before, held. Just get a little confirmation once it pulls back.
Yeah, I could see that. You'd have a good risk reward under those circumstances.
You would have a really nice risk reward.
Easy, good stop loss placement. I generally prefer things that don't test it the second time personally. So I would not be as interested, but I wouldn't be against you there. I just wouldn't be on your team.
Mm-hmm. You know? Mm-hmm. Well, you know, the nice thing though, is that I got $4 trillion in extra savings going to consumers that can be on the team on that pullback, right?
So, exactly. Hey, you don't need me. You know, we don't need to be on each other's team. We just don't want to be enemies, right? That's how I always think about trading. I don't need you buying with me. Just don't sell while I'm buying, or vice versa.
As long as the government's giving out trillions of dollars, listen, I mean, how do you fight that?
Oh, you don't fight that. I just think you're going to find better setups in CRM, but time will tell.
Not in Costco, though, the big retailer giant. A lot of anticipation for their earnings because everybody was unloading everything on their shelves there for a couple of months. Earnings reaction, though, guys, nothing here. Stuck in the middle of a range long term.
Yeah, it was mixed. You know, a little bit of a beat on earnings or a little bit of a miss on the EPS number, a little bit of a beat on the revenue. That's a big nothing burger on the chart, though.
Yeah, it turns out the profit margins on toilet paper are not as high as people think.
Yeah, correct, right? And probably the increased cost of having to clean and all those kind of things as well. And that's something Market's talking about for a long time with Walmart and a lot of these big box retailers. VMware, an infrastructure company, software, obviously, that I'm interested in long term, has a big gap out. VMW, if you can hear Noah. These are more interesting to me, Frank, because you were stuck at the 200. Now, if you can get a gap fill over the next 2, 3, 4 weeks, I can see trades developing off of a situation like that.
Yep, absolutely. You got to be patient to let it develop, right? We've got all sorts of choppy overhead, looks like looking back, but absolutely. Now we're out of that range and now we can actually have some movement, right? Mm-hmm. But patience, hey, this might just be a runner. And if it is good for the people in it, wouldn't be a me thing, but patience, something will likely develop on charts that look like this, whether it's, on this ticker symbol or something else. So, nothing wrong with adding that to your watch list.
Mm-hmm, absolutely. Nordstrom's JWN high-end retailer. We know they were hit hard. Say they lost like 40% in sales, quarter over quarter, I believe. Post earnings. Now you're sitting down here on support. That sector has been ugly. I don't know if you can short down here, Frank, but probably.
Probably, yeah. I don't know. I mean, I think they lost 333, which was the consensus was 107. I mean, that was a big miss. So, and understandably so. Understandably so. It's still, it's so beat up, and you've got all that choppy floor. Probably, I don't know. It's tough. I didn't find a whole lot of bearish setups going into early next week, so maybe that is as good as it gets in this current market. But going to be a tough trade, I think, with at least in the shorter term. There's just all that little floory area just kind of hurts.
And last one for me on earnings roundup, Ulta, if you can. Noah, I know this is one of your favorite companies in that long-term perspective, and you've talked about reasons why. The earnings now, we're sitting on the 200-period moving average, not much in the chart there. Noah, you still got this one on a watch list?
Not as much these days, what with the difficulties in the retail sector, but I do have to recoup money I spend there from time to time because of my teenage daughters. So that's really my passing interest in it over these years, is my daughter really likes the store. And so that we got, trying to keep her interested in trading. We've been tracking it, watching it, and she owned it for a little bit. I think that this is one of those things where I look at the numbers coming out and they're ugly, but at the same point in time, markets like the honey badger just don't care. It's going to come up and probably break out of that 200 after it poked its head up. I like the technical setup from a pullback with the hammer rising moving average, nice 200 zone catalyst. Like, I really like the potential for movement here. But as far as like planning and placing a trade on it, I might have to get back to you on that.
Give me a breakout over a pullback in this one.
Yeah,
personally.
I would say so. At least, based on today's candle.
Yeah.
Right. If we see a little more selling into that 222, 223 range in the days ahead, then you could maybe sign me up for a pullback. But today, I just think risk reward would be tough. Not so much that I disagree with it maybe being an aggressive pullback, but risk to reward looks like that'd be tough to pull off.
A couple of good questions coming in here in the chat. We'll get into some other companies. I want to pitch this one out there to the team. Antonia says, question, do any of the coaches implement quantitative analysis into their methodology? I'll take this one first. Antonio, when I build my trading rules and my trading systems, it's all data driven, it's back testing. It's then you use that information to kind of shape the way you're going to approach it. But there's always a mishmash for me personally, between quantitative and qualitative, because I use my judgment all the time, quite frankly. I mean, as a retail trader, an individual investor, I don't have access to the same data that the big supercomputers at Citadel do and things like that. So I can't run like an algorithm. So I use both personally. Mark, what about you? Do you use quantitative analysis? I know the answer to this, but how would you answer that question from Antonio?
Well, I mean, almost everything I do is based on moving averages and horizontal support and resistance levels. I've back tested every data point on the moving averages I use. I got more data points than I probably should have. I could have spent that time probably. I could have stopped at 12,000. I didn't need to go to 36 billion thousand.
Little OCD on that.
Oh, that's who I am though, right? And so, like, as far as the belief system that I created on trading, it's quantitatively based. But I use my gauge of sentiment tremendously. For example, why do I feel comfortable selling naked puts? Is because I believe that the Fed, quantitative easing, trillions of dollars in consumers' levels, probably trillions more dollars coming. I believe that creates a backstop. Now, there's no way for me to prove that quantitatively, right? We've never been in this situation before with this unique situation. So you have to use qualitative judgment. At least I do. You don't have to, I guess. Using qualitative judgment in trying to get a feel for the market, where the market might be 3 weeks from now, 7 weeks from now when you sell those naked puts. But yeah, like it's a good mix from both. Now, qualitative can be the hardest thing for a new trader to implement. And so my advice to any new trader is that unless you find a source that you trust implicitly in what they're saying, to stick to the quantitative side of things, because qualitative is an art form that's not easily taught. So.
Two more questions in the chat here. I love this one. I'm going to give this one to you, Frank. And it was about gold. I think it was Divinity from Vancouver says, when you guys talk about buying and holding gold, do you mean buying the /GC and holding that? I know you've already answered in the chat, Frank, but give us your answer here.
So yeah, I mean, there's multiple ways to do it, and it will vary depending on who you ask. The futures contract, always an option. The GLD ETF, very popular, especially for cash flowing around here. Obviously, physical is, not anything to be unhappy about. Some people do. You don't do any physical, right, Mark? You do all on the paper side, and I'm on that side as well. But like Matt and Noah, I know he loves his silver. Physical is an option. Individual gold companies, the gold miners, GDX. So there's lots of ways that you can do it. A lot of it will just depend on you and what you're comfortable with.
Mm-hmm. And then last one, Cross asked, any of you guys interested in 5G stocks? And great timing on that, Noah, because we did a big 5G webinar just a few weeks ago with Coach Gino, right?
Oh yeah,
it was fun. Yeah, me and Gino hung out the weekend when the scouting report was over for like an hour and a half, just talking 5G stocks. It was fun. And that was a pretty deep dive. There is a webinar in the special webinar series probably about 3 weeks ago, right here on YouTube. There's also the 5G watch list from, I guess that probably would have been 2 weeks ago in the stock report. Definitely worth checking out. Did a pretty deep dive. But yes, to answer your question, I personally am very interested in those stocks.
Yep. And just under the playlist on YouTube, you can find those old webinars. I think Cody just linked that in. Let's keep moving through the markets here. Tesla next, very popular company. Elon, I don't know if you guys saw this. He got paid today, big time. He got a $775 million bonus for keeping the stock above $100 billion in market cap for a long enough period of time, and also showing increasing revenue. CEO performance, obviously, being paid, I got no problem with Tesla paying him money. He owns most of the shares. It was by the board. Mark, what about you? CEOs getting compensation for performance feels capitalistic to me. I don't have an issue with it. What about you?
Good for Elon, right? Good to be king. Like, listen, I'm never going to hate anybody. I'm not the type that if someone's making a bazillion dollars, I'm not going to hate them. If he's right, the only thing I hate is when Hertz executives get paid millions of dollars after their company goes bankrupt, because we have to retain talent. Like there wouldn't be other people capable of running Hertz into the ground out there. We have to retain these individuals, right? It's absolutely a scam. It's a terrible scam. It's like, hey, we're going to go bankrupt. All the money's going to go to the creditors anyways. Let's give ourselves $16 million in bonuses because, hey, better us than the bondholders and the creditors, right? That's what's really going on. Of course, your average Joe that got laid off, well, screw him, right? But Elon, good for him.
I mean, this is a story. Exactly what you brought up is exactly where I was going with it, because when you perform, I got no problem saying, hey, great job, right?
Yep.
It was part of his contract. It was pre-negotiated. Everybody knew the terms, the board, the shareholders, it was public information. But paying executives when they don't perform and run companies into bankruptcy, Frank, it just doesn't feel right.
You're not going to get me to sign up. Yeah, you're not going to get me to sign up for that. I think Mark summed it up very nicely.
Amazon next, another example of the post-lockdown world just kind of extending in some of these companies. Amazon obviously picked up a lot of workers during the period where they had all this demand. They actually just converted 125,000 workers from part-time to full-time. So there are jobs out there. I was having a conversation with Mark earlier. People sitting on unemployment right now, it doesn't make sense to me. There's going to be a post-July world where you don't get it, Noah. You would think that you would have a strong desire to go out there and secure long-term employment, don't you?
You would think. But, in the meantime, like Netflix and not.
I get it. I get it. It's nice to be able to hang out at home and chill and all that kind of stuff. But it's a good sign that companies like Amazon, Frank, are hiring people. I know all the negative news out there about everybody losing a job, but a lot of this is natural industries going out of business that probably were in some trouble, and other industries are going to pick it up. This is capitalism over the long term of thousands of years. The winners will come out ahead, don't you think?
Yeah, I mean, there's definitely some truth to that. I actually have a little cousin that works at Amazon, so I guess he's not that little. He's little to me. He's like almost 30, so so he's little to me. But yeah, they're out there. Those gigs are out there.
He works in a warehouse.
Yeah, he does.
Yeah, interesting. I know a lot of people who actually do that now. Actually, bring up Arch Coal if you can, or BTU or ARCH. They had to change it, I guess. No,
Yeah,
did they?
they changed it.
remember when we started trading? These were big names.
Yeah. Yep.
Oh yeah, like Peabody Energy is probably one of my worst trades ever.
Give me a 20-year give me a 20-year chart on that. Look at that chart. Holy cow. Peabody Energy, BTU. When I started trading in 2005, this was a hugely different company.
Well, look at the coal. There's the Dow Jones Coal Index, Tim. So I mean,
I bring this up because I actually read something that grabbed my attention. Now, nobody out there is probably like, "Are you kidding? What's coal got to do with anything these days?" Well, Mark and Frank and I are from coal country. Frank, our family, in fact, Mark, our grandpa was a coal miner. Our dad, Frank, your dad mined coal as well?
Yeah, my dad, my grandpa, my uncles. Yeah.
Yeah, this was the lifeblood of a lot of families and economies for a long time. For the first time since 1885, renewable energy actually had more consumption than coal globally. That's incredible to me.
So that was coming off the clean energy burst of the 1870s?
Well, no, think about it. Renewable before coal was firewood, right? So that was people used more firewood before that. So it was clean energy back in the day. Then they started using coal. But
so AOC was a big firewood proponent back in the day. Is that what you're telling me?
Nothing wrong with a campfire. It just made me sad. I don't know if I have any analysis around it. And I don't say it's a wrong thing because I understand how trends are changing. Cody, you study a lot of these kind of things, environmental impacts and whatnot. But coal just feels like a dying industry. And Frank, in communities where they're dependent on it, they have to evolve, don't you think?
Oh yeah. I mean, it was a big part of, it's a big part of many communities, but certainly in the general areas where we grew up, I mean, it was a huge part of it. And it's changed a lot, down in Carbon and Emery counties. It's still a part of it for sure, but you're seeing more and more, other things, Utah State down here, lots of restaurants, and they have to change. It can be sad, but you got to also face the reality, right?
Yeah. And if you look at that Arch Coal chart or the BTU chart, or even just this coal index chart, there is this old thesis from beginning investors, Mark, that I've heard many times. Well, it's got to go back up eventually, right? And not for everything. It doesn't always have to go back up.
It doesn't have to do anything. So
it's hard to see the scenario. When you use fundamental analysis, and I try to use 10, 20-year time frames, that if I buy this and I have to invest in it, I'm good for 20 years. Man, it is hard to make the case for coal, right?
Yeah.
Mm-hmm. I can't make one. I can't even imagine a scenario. Maybe foreign investors come in and buy it at some point, but I just don't see any interest in it. And you're going to see this continued move. I mean, we heard this out of BlackRock Financial out of the recent earnings. They're not interested in stuff like this. They're interested in these ESG plays, environmental and social governance plays that are moving in a positive direction. I don't think investors are looking to buy coal companies, and it has affected obviously that entire industry. Let's keep moving here. NetEase, NTES, next if we can. I found this story interesting. They actually are going to list more shares in Hong Kong now, Mark. It kind of ties into the whole thing of what's going on with Hong Kong. And it made me, and I really don't have any idea. I want to get your take on this. Do you think this thing with Trump could affect the way that companies do business in Hong Kong, not just trade?
Oh, yeah, of course. I mean, listen, if you don't have trading status, if you don't have all of the perks that Hong Kong has had for 20 years, of course it's going to. I mean, I feel for the citizens of Hong Kong. There's the thing about students. I love students. I love young people's passion. One of the favorite things I saw recently were a bunch of students in Hong Kong protesting, and they were using they were wearing face masks, being social distancing responsible, right? But on their face mask, they said, "Not made in China." And I just thought that was a very clever young thing to do as you're trying to spit in the face of authority, right? And so, Hong Kong, I feel for, freedom is the underpinning thing that human beings crave and strive for. When that's taken away, you got to feel for those individuals. And so there's going to be a response, as there should be, from Trump. what are the market implications? Well, that's a big, huge question. We're going to find out shortly.
Here in about 30 minutes. And well, you never know when we're going to get the information from Trump, by the way, or how long the press conference will be. But sometime we'll get clarity on that. Frank, pull back on the chart. It's not too bad, actually. I mean, there's some messiness in there, but the reward to risk would probably shake itself out.
Yeah, well, the price makes sense. Testing that old resistance, hanging out on the 20. You could do worse. You could probably do better, but you could do worse. You see plenty of things that look like this right now, too. So, yeah.
A couple more companies, then we're going to look at charts. Slack, work. Noah, this one was on our report here recently. We've been talking about Slack for a long time. Earnings are now coming up, but they just got an upgrade at Jefferies to $37 a share. As soon as it hits 37, they'll upgrade it to 45 again. These analysts are always behind the.
Oh, if Jefferies like it, that means it has to be good, right?
Always behind
Yeah.
I know a lot of us here at Tackle, we're on board at that, breakout of 30, right? And I think some of us complained a little bit because it's a little slow. And when I say some of us, maybe I mean me. So I don't know. But now that we're leading into earnings, you do have to kind of consider, how you're going to handle it, right? If it was an investment, you might be doing different. But if it's a trade, we've got some good price movement. Can you afford to sit through a pullback if we get one? Those are the type of questions that you want to kind of answer ahead of time, right? I know I've sat through some pullbacks thinking I had time before earnings, then had to leave right after sitting through the pullback. Not a fun feeling. So, something to keep in mind. We always do a good, we usually do a good job as traders of saying, hey, these guys have earnings. Let's, not trade them a week before or whatever our rule is. But sometimes we're in one and we kind of forget to factor that in, how, the price action might impact it in the very short term.
Yeah, I'm with you. I mean, if I'm trading work here, if I was in a trade, I would probably consider a profit taking here on a Friday afternoon, heading into an event when you've already caught a nice 10, 12% run, right?
34 was my personal target. So, I mean, that's kind of where my brain is.
If I was investing, I would probably consider a protective put to maybe collar it into the earnings, things like that.
Yeah, makes sense.
There's all kinds of things you can do to take risk off the table in situations like that. And got to be aware of when those earnings are. There's no question. Guys, stocks and news, that's it for today. We're actually
I got one more for you. This is the why friends don't let friends trade biotech and pharma companies, NERV.
The nerve. Oh,
So,
what happened here?
Just trial went wrong. You see this all the time, maybe not to the level of an 80% clip.
Third phase clinical trial proves no more effective than placebo. Boom.
I can't remember the symbol, but it reminds me of one of my worst trades I ever made in my life. I bought a $60 biotech stock in my very first 2 months of trading on a little pullback, followed the technicals, master trader rules, all that kind of stuff. Did not know it was a biotech company because I was new and didn't look it up. And the next day it gapped from 60 to 10, Frank. I was like, oh, damn.
Yeah, that you probably have not done drugs since then, right?
Not like that. If I play biotech, I usually use fixed risk spreads and stuff like that.
That makes sense.
I mean, that's the thing. I mean, if you use options on biotech, once again, you know exactly what your risk is. Playing it straight stock, it's hard because you don't ever know when these news stories are going to pop.
That's right.
Yeah.
And so, once again, one might say, well, but they can pop everywhere. True, I guess, but it's not the magnitude, nor is it at the percentage that it can happen in biotech pharma. So when you're trading biotech and pharma, nothing wrong with trading. Make sure you can use some kind of instrument that protects you from a situation like this.
It's also because in science, most experiments and most trials go wrong.
Yeah.
Because in order to claim something successful, you have to have a p-value of above 0.5 or 0.05 is the p-value that you want. And that rarely happens. Very few discoveries actually go as planned. So you're not only playing speculatively on the stock, but if you're playing it off of hopes that the trial is going to go right, more times than not, it won't.
And Antonio, funny comment. So no PPT for that stock. No, the plunge protection team doesn't come in and bail out biotech, small cap biotech companies. Yeah, that's funny though.
That is
Don't
pretty
worry,
funny.
they'll come up with, they're going to suddenly pivot to antibody test, in
There
order
you
to
go.
get some of that free money, right?
They'll
You
try to
know, so-
repurpose whatever trial drug they were working on. Oh, it didn't cure heart disease, but it helps with diarrhea.
That's where Viagra came from.
And I got
That's
one more.
exactly how Viagra
No,
started.
straight up,
Yep.
it was originally intended to be a heart medication that was not effective.
Yep. They repurposed it.
Yeah.
Well,
Whoops.
this is an interesting.
Here's an
side
interesting side effect.
effect.
I wonder what we can do with this.
That's funny.
By the way, we're nowhere near done here today, boys. Actually, we're going to transition into my
Wait, one more,
segment.
just to show you the power of retail traders. I think this is a fun one. LK, Luckin Coffee.
Ooh.
Luckin Coffee.
Are they still listed?
They recently were relisted again.
Oh wow!
Oh,
And if you want to see how retail traders look at the volume spike into the hundreds of millions of shares traded at Luckin Coffee, it became one of the most popular, heavily traded stocks there were. So find it very, very.
Well, and it's a good reason why, by the way, I actually do support recent legislation about having accounting standards for foreign companies, because we know there's shenanigans on the books. I mean, Luckin Coffee is a tale that we've heard before, where they cooked the books, like old President Bush would say. They had fuzzy math, Frank, and the stock obviously is not benefiting well from the news that came out. So
yeah, that's
ugly.
probably as much as I'm going to look at these guys for.
I have no
until
interest.
someone
No, you should.
bring
Dude,
'em up.
Luckin Coffee has some of the best liquidity there is in the market right now. I'm having a fun time trading.
It's
Luckin
really
Coffee.
percolating up right now. We can sit and do these kinds of puns all day, Mark.
Oh, the cowboy percolator. I have made cowboy country coffee on a fire pit before. If you've
It's
never
good.
done that,
Yeah, it's delicious.
damn good. Last section here, guys. Let's make our last transition. And my favorite section of the day, actually, that we do is our Coach's Corner, where we go around the room and we hear what's on everybody's mind, what they're paying attention to, what they're focused on. And if they got a few companies that want to, show us, it's all great as well. And let's take a peek. Let's start with you, Frank. And as you get ready with your list, I do want to just kind of pitch one simple thing here today. The Tackle Trading Twitter account. I did drop the link in the chat before. Coach Frank actually runs our Twitter account. He's the one posting all those charts, good setups. If you're looking for just good content, just good chart setups, go and follow at Tackle Trading. Cody, if you can get the link, bring that up. And let's bring, actually, Noah, you're running the screen. Can you bring up Twitter and show us the Tackle Trading Twitter real quick? Because Frank, you have a lot of fun doing this, right?
Oh yeah, I love it. I mean, as a trader, when I find a good looking chart, whether I find it on my own or somebody else brings it to my attention, the first thing I want to do is show it to somebody else, right? But just like most traders, I'm hanging out in my office by myself. So I love being able to share those charts. I love being able to talk with the team. There's a bunch of us over there on Twitter, and it's just fun to be able to stay in touch with one another. I do, most of the talking, through myself on Twitter, which is Frank Martin 23 if you are looking for me. But I really enjoy it. I don't use Twitter like a normal person, but as a trader, I love it.
Yeah. Yeah. And if you can go down through that feed a little bit here, Noah, kind of give people an idea of what they can get by following us on Twitter. I love the way you run Twitter, by the way, Frank.
Oh, thank you.
I'd like to see more cat videos, Frank. If you could muster.
Yeah, well, I've got that.
Okay.
I'm trying to get a big catalog put together just
do
for
we mean
you.
like Caterpillar? Like, because we
sure,
can do
cat
that.
charts, cats.
Yeah, cat charts.
Whatever's good.
Yeah. It's worth a follow, guys. I mean, you find good chart setups, information, our blogs, anything that we're doing in Tackle Trading. Usually, as Frank is right there getting the information out there to our community. So definitely give him a follow. Frank, you're up first, my friend. What do you got on your radar?
Listen,
Give me
it's
something to make some money, Frank.
It's Friday. I feel like I have. Apparently, Mark didn't like DraftKings last week. I was very surprised when I heard that you didn't like that bounce off of the 9, but I know Linda did. So shout out, Linda. But on Fridays, I've always gone through my scanning by now. So I always have a few things I want to take a look at. A couple right off the bat.
Couple what, Frank?
Uh-oh.
Oh no.
Oh.
Did we lose him?
Did we lose him, or is he pausing for dramatic effect?
It's probably a
Frank,
Wi-Fi.
Frank doesn't pause.
He doesn't
Okay.
pause it. So we must have lost his
Twitter has
Wi-Fi.
banned Frank for violations of its terms and services.
I think I hear Matty back there. Matt, how you doing, sir?
Yeah, I'm doing absolutely fantastic. My computer hit the bed last night, so I've been trying to scramble here today. Finally got back and just listening to you guys go through your analysis or, cat videos or whatever you guys are talking about at the time. I did love Frank cutting out right when it says, "I got some gems for you guys," and then it's just boom, gone. So it does sound like he's back though.
Am I back?
Frank,
Yeah,
you are back, Frank.
I never left. I did get the dreaded "the internet is unstable" message that you get.
I think we're all used to that at this point.
Yes, it was
in the quarantine.
It was just pause for dramatic effect, right? These
Yes.
these charts are going to look better now. At least that's my hope. So
what do you got for us, Frankie?
I got CCI. Potential big breakout developing on these guys. A ton of momentum going into that resistance zone. Of course, these are a REIT, and so maybe not everybody's cup of tea. But how do you not like that price movement? I don't know how you don't.
I mean, it's running big into the breakout. I could see why somebody would be hesitant, but at least from a watch list perspective, anything hitting into a new high, I'm going to be interested in that. Timing of that is a different discussion. Obviously, I know you don't like making a lot of new entries on Friday afternoon, Frankie. So it's probably
Right, yeah.
so too, right?
Yeah, I would like to see. What I'd really like to see is a bit of consolidation. I'm greedy. You know me. It never hurts to ask, right? Something breaking today. Regen, REGN. I know we've talked a lot about these guys, but have developed a very clear. Again, they had huge price movement.
REGN, Noah.
I'm a little dyslexic.
Regeneron, yeah, there you go.
That's not a bad bullish retracement though.
Yeah, go back to that last chart too. That was.
I can't remember the order of the letters now.
RGEN, I believe it was.
It's easy to get those two confused.
I like this breakout better.
I would agree. I would agree with that, at least as far as Monday morning.
Yeah. Yeah. I mean, you are running into that resistance. You've got nice volume behind this move, obviously, as well. It's a big stock. Probably play the equity, I'm guessing. The options can be tricky on stocks this size. I believe Regeneron, though, is definitely, it's been on our list before, right, guys?
Yeah, we've had it. Yeah, we've had them before. So yeah, they're pricey. You got UNH too. UNH took out that resistance that they've been fighting with for months now, and not really seen great movement, which is probably a good thing, I guess. Depends on if you own it already, right? But as of right now, it looks like we are going to close above resistance. Obviously, there's some day left, so we'll have to see where that takes us. But very clear line in the sand at that 300 level of resistance. No follow through today. Would have liked to see some of that, but I do believe that this, as long as we hold this, it warrants keeping an eye on personally.
Mm-hmm.
Your old friend Spot, Tim.
You stole my thunder.
Of course I did, but I name dropped you because I wanted to give you the credit.
I appreciate that, Fred. I love the chart. Obviously, recent news on this company, but that flag up there is interesting as we're coming off the high point.
For sure, and where they sold off, from was their all-time high, right, where we started this pullback. So that makes some sense that some profit taking would be there. A little inside candle here today.
Do we call this the Rogan rally?
You can.
You can. Yeah. Okay. WWE. I've had WWE a few times, usually from the bearish perspective, but this time around, I'm actually looking at a little break on WWE. And
that's a pretty chart.
Isn't that nice, clean consolidation? Not a lot of resistance. Should, depending on obviously how it plays out, should have a reasonable risk to reward profile if we can break. Haven't broke yet, may never break, right? That's why they, it's not a breakout till it's actually happened. But I thought that was very much worth mentioning here today. Let's see, Facebook. I know you guys have talked Facebook, so
this one as well. Yeah.
Testing that old breakout point, doing that little 3-day dance, little doji here today. If you believe in buying Facebook off of that old resistance level, I mean, you're getting your chance, right? Whether you should or shouldn't, I guess time will tell. From that point of view.
So how do you guys play? Because one of my favorite setups, and I'm sure you guys is the same, say if you disagree, is that you have that breakout. I know Cody loves it. That's like his favorite way to play breakouts is breakout, pull back to the old resistance level, find new support. Now you love that setup, right, Cody, as a general rule?
Absolutely.
Yeah, I mean, I've heard you say that several times. How do you guys play confirmation to get in on that setup? Because that setup's a common setup, happens all the time. It's why I like the CRM a couple weeks ago. What is you guys' confirmation to get into that setup? Because it's usually a pretty good one, right?
Well, Matt actually built the step system video course over on Tackle Trading, one of our premier products. And there's several different ways you can confirm, Matt, that you teach through that. Noah, you held a mastermind group here on Wednesday, but Matt, there's a lot of different ways you can confirm off of patterns like this, right?
Well, I mean, there's a few different ways you can play the breakout. Obviously, you can trigger above the breakout channel. That's number one. That would be an aggressive entry into a breakout. And, you know, those aggressive entries, it can be really, really good from a reward to risk ratio, but you do give up a little bit of probability analysis without the confirmation because, you know, we've seen it test up, come right back down. You kind of saw it on WWE today, test up, come right back down. So you could certainly be aggressive in that environment if you want to play it from a momentum perspective. If you're a little bit more cautious, you wait for a close above the breakout channel, and then you play the entry 10, 25% of the ATR, whatever your personal rule is, above the high of the day or above some intraday level of resistance that you're looking at, whether that's on a 30-minute chart, an hour chart, 15-minute chart, whatever your favorite time frame is from an intraday perspective. And then the third way is kind of what Cody does. And you know what Cody does, it's a little bit more conservative. You're giving up the potential of a tremendous amount of momentum to the top side, but you're basically waiting for it to confirm going back up, you know, that breakout channel going back up, and then you wait for support to really truly hold, thus forming that higher high. And that could be some type of consolidation above the breakout channel, maybe a high base above the breakout channel, maybe it's a flag coming down in to test out that breakout channel. But that would be a little bit more of a conservative way to play it to ensure that support is truly holding, that old resistance level is truly holding. And we talk about that at length in the step system over there at Tackle Trading.
Frankie,
Awesome.
anything to add to that?
Yeah, awesome. I mean, it really comes down to, at the end of the day, you know, Matt hit it right on the head. What are you comfortable with? You know, do you want to be aggressively, you know, Mark, I think then the hourly chart can be a really good way to kind of look for some nice, clean hourly signals at that price point. If you want to be a little bit on the aggressive side, you want stabilization one way or another, whether that's on a 15-minute time frame, you know, a daily, heck, a weekly, right? You know, if you're that conservative. But I found the hourly signals to be fairly interesting in those type of environments when you have that break and then pull back.
Yeah, and Frankie, if you just pull up the S&P 500 on this /ES contract, you can kind of see what Cody likes to see. You see the breakout coming in on Wednesday this week, a little bit of doji at that higher high there, come back down, retest that 200-day moving average, make sure it confirms, maybe a couple of days consolidation, really seeing that 3,000, that 200-day moving average hold. And then that gives a trader like Cody a little bit more confidence that now support is sold, not just resistance broken. He has now multiple levels of support that he feels comfortable with, both from a daily perspective as well as from an intraday perspective. So there's a lot of different ways, and it really just kind of goes down to your personal prerogative from a trading perspective, understanding who you are as a trader, understanding how, you know, your personal trading personality from an aggressive trader versus a conservative trader. And that just simply takes time. I mean, Cody's been trading now for 5 years.
Yeah.
He has thousands and thousands of trades under his belt. And, you know, being Cody's mentor and, you know, confident for those 5 years, I can tell you that Cody, the way Cody trades today is vastly different than the way Cody was trading even 3-4 years ago.
Absolutely.
No doubt.
Absolutely.
Cody was extremely aggressive. Extremely.
Oh, yeah, it was.
Most of us are at the start.
And, you know, just I'm going to get rich. I'm going to buy every breakout. I'm going to put my order 10% of the ATR above the breakout channel.
Hey, that's where I started too, Cody.
We all start there because we get the dreams of the return, right? But then as a trader over time, you really start focusing not just on the return, you focus on the probability analysis, you focus on the risk control. And it's like the old saying goes, You know, when we're in college, we're all, you know, a little bit of liberal hippie. And then when we get into the real world and we have to start paying taxes, we get a little more conservative. You know, as a trader, you're a little bit more aggressive when you first start trading. As you get a little bit more of a veteran status, you start giving up a little bit of the return for additional, you know, support levels and probability analysis. It's just, to me, it really is the natural evolution of a trader.
Mhm.
Yeah, I think so too.
Yeah. And I think one of the keys, whether you do aggressive or conservative confirmation though, guys, I think one of the keys everybody out there needs to learn how to do is multiple time frame analysis, because you're only going to get that clarity on exactly where you want it and how to map out reward to risk once you're trained, once you go through these courses and get education by mapping out different time frames. You got to go down to the hourly, and you got to go down into shorter time frames, whatever your favorite is, right? So that you can pinpoint some of those details.
Tim, I also think you have to visualize it. It's like you're sitting on the tee box, par 4, 469 yards, and you're visualizing where that shot's going to go. Even though when I'm golfing, it never goes where I visualize it, but you visualize where that shot's going to go. You got to kind of see that on the chart. You got to be forward thinking, because the stock market is forward thinking. Use historical analysis to determine probability analysis, but you got to visualize where that's going to go. And when Cody's setting up his trade, he visualizes that breakout. He visualizes where that resistance is going to form, and he knows the support level that he is pinpointing where that needs to hold as well. It's kind of like you say, okay, this is what I need, this is what I want, and then you have to show the patience to get it.
Yep.
Love it.
Absolutely.
Patience is the big one in there. Yeah, you got to have the patience. No FOMO.
Well,
Any
and
more
that's
charts,
you
Frank?
hear me say it all the time, Cody. Don't chase the dragon. That's basically that's a way of just saying, show some patience, let it come back to you.
Mm-hmm, mm-hmm. Any more from you, Frankie?
I've got plenty, but I'll give you just a couple more. Don't forget about Domino's, DPZ. You know, we've been watching that one for a break for a while. We've yet to get it, and we may never get it, right?
Kind of like waiting for your pizza.
Listen, it's worth the wait, right? So
Like, come on.
Sometimes it is. Sometimes I've had some really good Domino's pizzas. I've had a couple ones, but a long time ago that I wasn't a fan of. You know, never forget. It's easy. It's easy to put a stock on our watch list, especially these breakouts, those major breakouts, because it's hard to break through those levels, right? And so it's easy to kind of forget about them, you know, because you know, just another day of not breaking out. So definitely, you know, something that I still have on my radar at this point in time. Not a lot of great looking bears out there right now. At least I wasn't finding any. If you like deeper retracements, I know some of you do. Cincinnati Financial, CINF.
Yeah, that was on Stock Report last week.
Yeah, so we've had a little more, and I'm not a huge fan of deeper retracements personally, but I can see it. You know, I can see it. You know, potentially developing at that point in time. You also had, was it WB? Let me make sure I'm saying the right one.
Weibo.
Yeah, Weibo. Now it's kind of a mixed bag. You know, they broke through their floor today, but have kind of rallied up. That's why, for me, my breakout and breakdown rules are very clear, right? It's not until it closes and continues. To me, that's not a breakout. Whereas, you know, 10% of the ATR, Frank, from 2007 would probably have already been in here and cursing. So we haven't confirmed that break, but I do think that's a very interesting placement as far as where we are. That's a pretty clean floor there on WB.
Mark, you're up next. What are you paying attention to? Obviously, this press conference in China, but any companies, anything on your mind?
I want more and more. I want silver is more and more and more on my mind, right? How to play it, how to get into it. I want to own silver so bad long term, having not. I tend to focus on areas of my portfolio that I don't have any exposure to.
Bring up SLV if you can here, Noah.
What am I bringing up?
SLV.
SLV.
Mm-hmm.
And so, you know, I got exposure to oil. I got, by the way, on oil, rig count went down for the 9th straight week. It was a total of 15 rigs again. So, I mean, I know I'm an oil geek, and I know that this probably doesn't resonate with anyone, but to see the amount of rigs that have been cut in the United States is absolutely staggering, as production is just obliterated here domestically on oil. So I got exposure to the other things. I got exposure to some naked puts on dividend companies, but silver, And so you got, some choices in silver on how you want. Now you can always just buy a breakout, right? Never a terrible idea. Now you could go wheat and precious metals, go to WPM. So it's all a matter of how do you want to play it? Do you want to play it with an instrument, an ETF that tracks the rate of silver? Do you want to play it with an individual company? Terrible potential technical setup, right? But I'm looking from a long-term exposure.
Did you see Pan American today? PAAS?
I did not.
I think it was either today or yesterday. I think it was today. I saw it on the price volume leaders. It was up like 8% here today as well.
Well, it's a nice little breakout, right?
Mm-hmm.
That's a nice little breakout. And so it's like finding a way to get exposure to silver, knowing that there's downside, right? This is not a trade. This is having exposure to my portfolio, having a little bit of silver. I just want a little bit of silver in my portfolio, and I don't have any. And so, it's going through the options on a Friday. And here in the commodity report / mind of a trader that I'll be doing live here in 30 minutes for pro members, I'm going to talk about silver and gold and oil and these things. So, that's whenever I'm at the end of the week, I'm usually looking at portfolio allocation. Where am I light? Where do I want something of? And I'm hyper focused on that. And today it's silver, and it's finding a way to play silver, finding some way to get a little bit of silver into my portfolio. Not a whole ton, I just want a little nibble.
By the way, if you are a pro member and you're wondering how do I find that event, just the events page, there's an item there on the 29th, which is today. And Mark does go live on Friday afternoons here. He's been doing it recently, 12:30 Mountain, about 30 minutes from now. And going to be a lot to talk about here, Mark, with the press conference and everything going on.
That's the thing is like, we're going to start off the show with commodities, obviously, but obviously Trump's going to speak, analyze that. What does it mean for last second decisions heading into a weekend? We're going to have a lot of information in the next hour based on Trump's news conference coming up here shortly.
Noah?
Yep.
You're up. I think Noah's probably only thinking about building that tree house I saw on Facebook. But,
well, that would be, my first stock was Apple. My second stock was Home Depot. So I don't know if it's just because I'm spending a lot of money at Home Depot or, just trying to. Now, I like both these charts. I like Home Depot for the breakout. Good setup. I also like, Lowe's has already kind of poked its head up above there already. But I think that those are both showing a good sign of strength. And I've just been watching this Apple chart for quite some time now, for a couple of weeks, watching that 32.25, 32.27 zone for a breakout. I think the upside potential here is pretty solid as well.
Apple has a long history of paying out when it breaks all-time highs. So I could see what you like about that one, Noah.
Oh yeah. Well, then back to Home Depot. Just got to take one more trip today. Another trip tomorrow probably. I'm that guy who's like measure twice, cut 3 times, go to Home Depot 4 times, come back, finish the project.
Aren't we all more likely to trade companies we do business with?
Wasn't that the Warren Buffett?
I mean, that's the
trade what you know.
Yeah. We all do it. Yeah. I mean, and part of it is, well, okay, I like this company, good product, good service, whatever it might be. It's that Warren Buffett thing. But I think it might even be just that revenge thing. Like, I got to make some money back on all this money I spent at Home Depot. So
and I just bought a new fridge too. I mean, I had to do it all. So yeah.
Well, stop by and grab yourself a Monster beverage. No, I forgot to bring that one up. We got it. One more minute. You got to look at Monster.
Sure.
Because if you get a nice cold Monster beverage along with your Home Depot, and you might be in pretty good shape. You got to go to a weekly to truly appreciate this bad boy.
That does make me appreciate it more, Frank.
I thought it would. I know you all too well. I don't know what that says about me or you for that matter.
Well, I always assume the charts that you bring up, Frank, have been vetted on the weekly, because I know that's a big thing for you to watch. I mean, you look at all the time frames.
Oh yeah.
Time. Yeah.
Oh yeah.
Yeah. Let's do one from me, and then we'll get to final thought from old Maddie over there. Yeti, Frank stole a bunch of my charts, so I'm not going to repeat them, which is fine, Frank.
That's what Frank does, though. Every scouting report meeting, Frank steals all the charts.
I know. You should not let me go first. You think you'd learn?
Because I steal all of his picks anyway.
I love this company. I love their product. It's been on my watch list for a long, long time. And that breakout, it was on our reports last week. It caught a nice little breakout, now a little hesitation in here. If you missed it last week, over the next 5 or 10 days, you might get a little bit of a flag pattern or a pullback back into resistance. Don't think it's ready here today, but I'm watching this newly developing trend above the 200. And I do love this company. I think it's definitely watch listable. Maddie.
Yeah, well, Mark stole my thunder. I was going to bring up silver. I just absolutely, we talked about this quite a bit yesterday, but I just love that breakout after consolidation above that 200-day moving average above 18. And I made the statement yesterday, if you can't trade silver above 18, you can't trade anything. That's how much I like it.
I heard you say that. I was lurking and I heard you say it.
And we got a clean break and got momentum behind it. We'll see if there's carry through. Obviously, there's some junk to the left of the chart on silver, but that's the one that really has caught my eye. And then obviously, I'm just going to piggyback off what Frank does. And lastly, let's get we got the scouting report meeting coming up where we rank all these sectors, the indexes, the commodities, and the currencies. And I'm excited to get in with the crew of Tackle Trading to do that here today and formalize the picks for the scouting reports.
Yeah, 100% excited about it as well.
Sure.
Mark has an event here in 30 minutes. If you're a pro member, go and join him. I mean, there's going to be important analysis there after the post-Trump press conference and see what's happening. Mark, you start that in 30 minutes. If you ever need any information from us about how to access your membership, how to get into a show, buzz us an email. Mark handles customer service over there, does a great job. team@tackletrading.com. If you are not a pro member yet, there is a pro member trial link below. Pretty simple, pretty easy offer here, guys. Come and try it. 15 days for free. You can see if you enjoy what we do. We know you're going to love it. It's a way for us to bring you in and help you guys learn how to trade and give you education, community support, and structure. Weekend webinars, weekly webinars, all kinds of content. The weekend reports are one of my favorite things, which we're going to start working on here as a team as soon as we get off this call. And other than that, guys, really great week out there. Really enjoyed it. Good week of shows.
A little bit of oil news. Oxy just cut their dividend from 11 cents to 1 cent.
Ooh.
Selling off on the news.
Yeah, imagine so.
You're going to see that story many times over the next year. Oil companies are just going to have to adjust. I mean, we heard it out of, what was it, BP recently, even one of the biggest. I mean, so yeah. All right, guys, great job, everybody, this week. Frank, as always, appreciate you being here.
Yeah, thanks for having me. Always a lot of fun.
Fantastic. All right, guys, we're out. We'll be back on Monday, same time, same station.
Have a great weekend, everybody.
Bye.